Okay, let's start. So, my name is Timo Rahkonen and I'm from Rovio. I'm heading the strategy and M&A there. And my topic today is M&A insights for developers. So, maybe the first question is, what is M&A? So, M&A means mergers and acquisitions. So, merger means that you combine with some other company. Acquisition part, it can be either someone is acquiring or selling some companies. First, we need to start with some disclaimer first, because as you all know, Rovio is today a publicly listed company. So I need to say here that all the opinions, what I present here, they are mine. So they are not my employers, Rovio Entertainment Corporation. So that's the mandatory part. Let's kick off. Just briefly about myself. So as I said I'm heading the M&A and strategy at Rovio. I have been working there for 6 years. And some projects, what I have done there, I was, for example, project manager for the Rovio IPO, so when we listed the company in 2017. And then I also was a project manager for our latest acquisition, PlayRaven. And that's actually something that I will tell you a little bit more a little bit later. Before Rovio, I did some management consulting, investment banking, so I have a business background. I also have a degree in business, but what I do in my free time, that's not a business, so I love to do different kind of sports and of course play different type of games. For mobile, I have played a lot Empires and Puzzles, still playing in the top 100 global alliance, so that's taking lots of time. But then I'm also like to play lots of console games. Final Fantasy is my favorite series there. Just briefly about Rovio. I know at least some of you know something about the Rovio, Angry Birds company, but we are also much more. So last year, our revenue was about 300 million euros. We have 2 business segments, games and brand licensing. Games accounted almost 90%, so we are really games-first company from that sense as well. Whereas brand licensing was 10%. Brand licensing means consumer products, so basically kind of like a merchandising, and then a content licensing like Angry Birds movies. So the first movie came out in 2016, and the sequel is actually coming this August. So stay tuned for that. We have 5 offices. Our headquarters are in Espoo, so it's about 2 hours ferry from here. And we also have offices in Stockholm, London, Los Angeles, and Shanghai. We have 3 gaming studios, 2 in Espoo, puzzle studio, focusing on different type of casual games. And also we have a battle studio, which is doing different kind of battle shooters, PvP, team versus team type of games, and also strategy games. And then our 3rd studio, that's in Stockholm, so that's a RPG-focused studio. We have about 420 people today and over 40 different nationalities. But that was the kind of the mandatory part, so let's start to focus on the main topics for today. And I have 4 topics today. First, I would like to tell you something about the market from the M&A and from the mobile gaming perspectives. Then I would like to argue why M&A is a suitable option for developers. And then I would like to give you some advice. What do you guys need to know when you are kind of starting these kind of discussions with like bigger companies like Rovio? And then finally, I will give you a real-life example. So I will tell you more about the acquisition, what we did, why did we do that, why did PlayRaven choose Rovio, and what's happening there. But let's start with the market first. I think all of you have seen this kind of news like in recent months, like there's lots of activities ongoing in the market, so bigger companies are buying smaller ones, like Zynga acquired Small Giant Games, that was a huge deal, and then Playtika acquired Vuga, Rovio acquired PlayRaven in November, and then just last week Jam City acquired a Berlin studio called 231 Play. So what is happening there? Why there are so many deals? So what's basically driving this kind of consolidation? So there must be some sort of market trends. So let's start to explore those a little bit. So first of all, the mobile gaming market, it's maturing. And we can see that if we, for example, look at the Newzoo's latest market estimates. So mobile gaming used to grow even 30% per year, but now it has slowed down. Okay, it's still over 10%, which is really nice, but it's really far from the kind of like the peak years. And if you look at the top grossing charts, especially in the US, let's take a look like, for example, last year. There were not that many new games that were able to reach that chart. Like, of course, there were like a Fortnite, Empires and Puzzles, but most of the games, they have been there for years. Think about Candy Crush, Clash of Clans, Angry Birds 2. So the industry is something that really favors the big players. So it favors the scale. And this is especially something that you can see when you are trying to scale your game. So when we are talking about the user acquisition. Because the big publishers can have a massive marketing budget, so they can easily outspend their smaller players. Think about like some puzzle gaming companies. They can have like a 2-year payback period. So good luck with you if you are like aiming for much smaller, or you don't have the money, you don't have that kind of risk appetite, for example. And then if you look at the production budgets, they're also increasing because the quality is improving all the time. There's a new type of like Apple iPhones coming like every year, so the devices are kind of like improving every year, and so are the games. So they're kind of like a console PC quality games today. And then there are different kind of technologies and platforms. So if you would like to enter to something else, let's say you want to do some messenger games or AR games, or now there's Apple Arcade. So all of these take money. And then if you think about some geographical expansions, like, hey, maybe I'm doing something really good in Western markets, maybe I can do something in the Eastern markets. But if you look at the past, it's been really difficult. And I think, at least in the near term, this kind of stays the same. So basically like east to west, west to east, it kind of remains elusive. And if you think about or if you look at the valuation of the companies, that's also been going down, especially in the Nordic, and that's actually something that I will gonna show you really soon. So all of these trends are something that support the consolidation. Here is a graph that shows the stock prices of different like gaming companies, Tencent, there's a Nordic gaming companies, and then just like all Nordic shares. So you can see here that like all the gaming companies have going down. Like global gaming companies minus 20% during the last 12 months. And if you look at Tencent has been down like 12%. That's the world's biggest gaming company. And if you look at the Nordic companies, there was a huge peak during last summer, and then, okay? What's positive here is that during the last month, so in March, there was a positive development here. But this kind of shows that the gaming market is very volatile, so it's very difficult to value the gaming companies. And of course, that's something that's very challenging when we are dealing with the M&A. And if you look at the valuation multiples, like here you can see Nordic gaming companies and international gaming companies and their so-called enterprise value to sales multiple and enterprise value to EBITDA. So sales, so basically growth, and then profitability multiples. So you can see here that the Nordic value multiples, they have been going down quite a lot. Whereas the international gaming companies, like the sales multiples, have remained quite stable, whereas the profitability multiple has increased. However, if I would be looking like the January here, it would be looked a little bit different. So again, it's very difficult to kind of value the companies. There are lots of differences if you just kind of look at a single companies, not just some sort of like a group of companies. Here is the data from Pocket Gamer. That's a really good data that actually shows like how many deals there has been in recent years. And the left side here presents like how many mobile gaming related deals. So studio deals, technology deals, ads deals, all kind of stuff. So you can see here that there's a nice growth like during 17 compared to 16, but now the growth has kind of like slowed down. Okay, about 80 deals, and about half of them were studio deals. But if you think about, there are like tens of thousands or even more like gaming studios out there, so there were not that many deals in this industry. But I believe that the consolidation will accelerate in the future. So that was about the market. So let's now start to look at the why to do M&A. So what could be kind of reasons for that? My top advice, it's very simple. So you should follow this kind of formula. So you should only consider M&A if you think that it is something that can help you to grow, expand, or improve something. Here are a couple of more reasons for M&A, like from the seller's perspective. Of course, money is something. Like everyone needs funding for growth. It can be something that can help you to grow the game that you are currently developing, or then marketing or scaling that. It also provides, M&A provides you like a new business opportunities. Think about that you can maybe, now you're just focusing on one game. Think about that, hey, maybe you can have someone who is willing to back you and develop, so that you can develop several games. And then, of course, there are different kind of synergies. These synergies, they can actually relate to those capabilities. So maybe you are missing something at the moment. You have some gaps. It can be user acquisition, it can be analytics, it can be relationship with Google or Apple or something else. And or you just might have missing some talent, because recruiting in this industry, it's super difficult. It's even difficult for companies like Rovio. So this could be kind of like a way to solve the recruitment challenges. Maybe to have the missing kind of like a 3D talent or something else. And definitely this is also a way to kind of like get new learnings, because typically the buyer, like Rovio, we are willing to share our best practices for the developers. And it's also a way to reduce the risk level, because typically, especially smaller companies, they are only focusing on the one game. So what happens if that fails? Then you need to kind of like raise more money, start everything over or something like that. But if you do the M&A, you kind of have the secured future. And it can also be something that can kind of like basically help you to kind of like achieve your long-term targets and vision and dreams. And of course, the last but not least, there might be some personal interest from the financial point of view. You have worked hard, so maybe you want to get some money. So what should you know before seeking for M&A? Like, let's say you want to go and talk with companies like Rovio. So what is it kind of like? What should you do before? I think there are a couple of I would call them like a common pitfalls to do before you enter this kind of discussion. So I'd advise strongly to kind of like do your homework. I have 4 topics here. First one is to think about the strategic rationale or the synergies. So you should have like some sort of idea, why are you doing this? And my kind of like advice here is to think about, is this something that can help you to grow, improve, and or expand? So you need to have these kind of motivations. If you don't have those, then maybe M&A is not for you. And that's also acceptable. And it's also common to see kind of unrealistic expectation for the synergy, so that, hey, maybe you get the access to like a massive user base, like millions of user base, and then you automatically get all of those users to your game. Well, it doesn't work like that. It's not that simple. And then there might be also kind of difficulties to kind of identify like a potential ways to kind of like streamline, optimize the business. So my advice here is to think about what is the reason for that. Are there some missing gaps, something where you need help? So then M&A could be something that can help you to grow. The second thing here is the long-term plan or strategy. So especially smaller developers, they're typically focusing only the one game, only the short term, because they have the money basically for that. But let's say someone acquires your company. So this acquirer typically has quite a long payback time, so basically get the money back. So it can be 3 years, 5 years, or even longer. So if you only have the one game, is it enough to basically kind of like justify that kind of investments? Probably no, unless it's at like a top 10 grossing game. So that's why it's very important that you have ideas for the future. What kind of games you want to develop, not just a single game. So my advice here is that think about the future, think about the portfolio, think about the roadmap. What do you want to do? What are your dreams? So what do you want to target in long term? Third point here is the valuation. as I showed you, this is a very tricky part. It's very difficult to kind of value gaming companies. And what I have seen personally, there's been lots of unrealistic valuation expectations, because you just look at some examples of those multiples, magical multiples. You just pick the highest, and then I think this is the value that you should pay for my company. And well, it's not like that. What you should do here is that you should be able to kind of like argue and present what kind of growth drivers or profitability drivers your company has. Growth drivers, I mean, what are the reasons why you think your company is going to grow? Do you have multiple games? Do you have a clear positioning for those games? Can they really compete in this really competitive industry or not? Do you have something fresh, innovative ideas? And then the profitability, like how does the profitability is going to look like? If you just are going to launch a game, you are going to spend lots of marketing money for that, UA money for that. So when are you going to get some money, like the bottom line? And then of course, it's very important to be realistic. Be realistic with this valuation, because most of the discussions, they end really fast. And then the fourth part here is the integration culture. Gaming business is a talent business, as we all know. So it's all about the talent. And it's very important that you have an idea, like what is the ideal operating model, what is the target culture, what you are looking for. And you should think about like things like what's the kind of like the best thing from the freedom versus control, or like a top-down versus bottom-up. For example, Rovio is a company where we like to empower people. We are kind of like a bottom-up. We want the teams, we want the game leads to kind of lead the game development, and not just like a management is going to say, hey, you need to do this and that. Of course, we have a portfolio strategy, but that's something that we do together. So this is definitely very important. And also, if you are, let's say, like the potential acquirer is from, let's say, like from Western Europe, and then your company is from Eastern Europe. Of course, there are some cultural differences, so it's very important that you are openly telling about those. Okay, then the fourth topic is the actual case example. So PlayRaven. So PlayRaven is a Helsinki-based mobile gaming company. They had 25 people when we acquired them, and they're only focusing on the strategy games. It's a really veteran, kind of like a really talented team. We acquired the company in last November, and the reason for that, from our point of view, was that we wanted to expand to strategy games, because that's the second biggest category in mobile gaming after puzzle games. And we really believed that this team is super talented. We have lots of belief that these guys can accomplish great things. And the previous games, they were not successful, but we thought that these guys have got lots of learnings, and we have confidence that at some point of time they will kind of break the market. And what has happened after that? So the whole game development team, about 20 people, all of them have stayed at Rovio. They're working together, and we have actually added some like a missing talent, missing capabilities to the team. Like they, for example, require some technology talent, so we have added that to the team, and that has helped to speed up the game development. And if some of you might remember that they were developing a game based on EVE Online IP. However, there was some issues because the EVE Online IP's owner was acquired last fall, so that led to a situation that it was not okay to use the IP anymore. So that's why we decided together that, hey, it makes sense to kind of like start to develop an original IP. So what did we do? We gave them more time, like, okay, yeah, it's fine, even though they already had a game in soft launch, like we can start a little bit over. We can think about the team from the start. So we did some marketing tests and picked the best possible team. And I will show you a sneak peek about that a little bit later. And now they're targeting soft launch with their game by end of this year. But we did this because we had a long-term vision for this team. and so did the team. So they want to be one of the best teams in the strategy gaming. But what they were kind of missing was especially like the funding and also some other supports, for example, in user acquisition. So we have now developed together a long-term plan with these, and these guys are now developing multiple games because we decided that we want to develop first like a technology platform. So think about Machine Zone, how they have developed their Forex strategy games. And how did we basically sold Rovio to play Raven is that we basically show them that this 1 + 1 = more than 2. So these are the synergies what we can provide for the developers side. First of all, we can provide money. So they needed the money to develop the game, but also money for the new games and also to launch them, market them, scale them. And then organic user acquisition. So we have an excellent relationship with Google, Apple, so we can help there. We can provide cross-promotion support, and of course the Rovio brand helps here as well. And paid user acquisition. Nowadays, gaming, it's so much about this user acquisition. So we have an in-house team. We spend like 100 million euros per year for user acquisition. So we have lots of experience from that, from all the key markets and channels. And then the game development. So we added some missing talents for the team. So that helped to speed up the development. And technology. We have an in-house technology. We have invested tens of millions for that. We have tens of people working on that. So whether it's something that you need to run events or do some A/B testing, whatever, like a game-related technology stuff, we can provide all of them. You can just focus on developing the kick-ass games. That's kind of like our value proposition for our teams, but also the potential teams that we are looking for to acquire. And then we can provide different kind of central functions, like, you know, if you need like HR, finance, maybe even legal, you never know, or like a strategy support, we can provide that. So here is a sneak peek what they're doing. So we haven't revealed this before, actually, but they're targeting the soft launch later this year. So you will hear and see more about this. But this team is something about the mercenaries. So something cool is coming. So stay tuned for that. My last slide. So quick recap. So first of all, if you look at the market from the M&A perspective, there are lots of trends that support the consolidation. So the industry is maturing. Valuation, at least in the Nordic companies, are going a little bit down. Competition is really tough if you really want to break the top 100 crossing. So all of that support M&A. And then for developers, M&A is definitely a viable option if you want to grow, improve, or expand. So if you want to achieve your dreams, so this could be something that can really help you to do that. And it's really wise to do your homework before you engage to this kind of discussions. Try to think about what's the rationale, why am I doing this? And what's the long-term plan? What's the long-term strategy? What do you want to do? How do I create value in long term? What kind of games do I want to develop? What's the area where do I want to master? And then the valuation. What's the kind of like the realistic valuation expectation? How do I show that I have the growth drivers, I have the profitability drivers? And then last but not least, think about the cultural side, so the soft side, because this is a people business. This is a talent business, so that's really important to focus on. And then play Raven. So that team is now developing their first strategy game as part of Rovio. That's a Forex game, something about mercenaries. You will hear and see. Hopefully you will also be able to play that game really soon. But anyway, the point here is that we wanted to provide these guys a long-term plan, so future. So they are now developing multiple games, and at least I'm sure that at least one of them will be a big hit, but I'm really confident that most of them will be. So that was about my part. So thank you. I think we have 5 minutes for Q&A.
Thank you very much. So we have a question. Yeah, I see. Meanwhile, I'll share with you some sweets. as a small bonus for your talk.
Thank you.
Thank you.
Thank you.
So
Very
we have
kind.
a question, please.
Thank you. Thanks for an excellent talk. I was thinking about the cultural fit question. You mentioned bottom-up versus top-down and freedom and control. Can you name some other factors that you've observed where there could be a misfit between teams and acquiring company?
Well, definitely those are kind of the main things what we have seen. But like especially when we have been discussing with some Eastern European countries, we can see that maybe the culture is a little bit kind of like a more conservative compared to some Western companies. So people have used to this kind of like a top-down approach where kind of like a management says what to do and then the others basically just obey. So definitely that's something. And what else? I think those are definitely the main things. But then it's also kind of like what kind of values there are. Like some people are in this industry because this is just so fun. Some people are just looking for money. So there's so many different things like in between that. And we are looking for the guys who are passionate about this industry. Money comes if you are passionate. So it's kind of like the result if you are doing all the things in a good way.
Thank you, Timo. So we have one question here.
Thank you, Timo, for a great and very straightforward, open presentation. I have one kind of a more detailed question because I'm quite sure that you and Rovio will be and are approached with different kind of gaming companies and game-related companies each and every day with merger and acquisition ideas. So how do you kind of concretely measure and calculate the value of these different, let's say, indie companies? Because the discounted cash flows or earnings per ratio kind of a calculation models, those are pretty difficult to use when talking about indie studios who haven't actually deployed any games yet. So how do you do the measurements and the calculations?
Yes, that's a very good question. And answer for that, it's really difficult. So it's kind of, the first step is to get to know the team better and also kind of like present the Rovio also for that indie team. But we are looking for kind of like teams that have some novelty ideas, so something innovative, something fresh, because we know from our own experience that it's really difficult to break the market nowadays. So if we think that there is some cool idea that has a market potential, we will figure out the way to kind of like estimate the value for that. And if you don't have any kind of like financial metrics to support that, of course we can build the kind of like the deals in a way that there could be like a so-called earn-out components, for example. So something that will take account like what happens after you have made the deals. Like let's say you hit like a certain KPIs and then you will get the reward based on that. So that's definitely something that we can use here.
Thank you. We have time for probably one more question, if there's so. Nope? Okay, thank you very much, Timo. Thanks.
Thank you.